trading show live from the Bison Trading Labs. You know, I'm just one half of the trading team, and I go by the name of I'm the D guy, aka Pearl Financial. My other guy would have been here. You know who it is, Ty Trades Futures, but he's unable to make it here with us today. So, you know, I'm going to drive the boat, aka take over and host the show. I have a big surprise for you guys, and I hope you guys are tuned in. I have a nice little guest coming in. It's going to give us a nice little analysis on how he charts up and his ideas on how to break down the market. But I'm not going to get too much into that chatter. We're going to hop and dive right on in. So the first pair that I'm going to go over is GJ. We're going to start right on the monthly chart. All right. Now that we look right on the monthly chart, we want to try to look at this chart bear so we can get a good understanding on where the market is going. I know I said a couple streams ago that I was trying to get away from the monthly chart, but with previous experience on our last couple of episodes kind of proved no matter what type of trader you are, whether you're intraday or a swing trader, you will definitely include your monthly as a part of your analysis. So we're going to dive right on in. So just by looking at this, you can see that this pair's just been making lower lows and lower highs. The bears have been in control. Hasn't been any higher highs or higher lows. So the bulls haven't really been giving no signals of taking over the market. The bears have really just been in control, bringing the market down and down and down. So ever since this high, the market kind of shot all the way down and made this low down here at the bottom. It found resistance down here and then it shot back up. But kind of notice where that shoot up lined up with. If we bring this prices over to the left, it looks like it lines up with a previous low. So this low right here is going to be very important the more we drop down. So it came down here to this, once it made this high here, we got another pushback down to kind of retest this bottom area. Like, is this area strong enough for the market to stay above? Or are we going to have enough momentum to break through that low area? But as you can see, the market found resistance and it shot back up and it started making higher highs from here. It found support at this higher level. Once it came at this support at this high area right here, you can see that the market just shot back down again, and then the market shot back up again. But as you can see before, even if any of this kind of formed, this to me kind of looks like a nice little head and shoulders pattern where we have the head kind of sticking up at this top, and we have a shoulder to this left and a shoulder to this right. They don't necessarily line up equally, but in my case scenario, this is that good enough situation where it has come somewhat in the area. It may have not retested the exact same area, but it got close enough. So once it made this high area again, with this head and shoulders pattern, we was expecting the market to break the neckline. We did not get that confirmation. We actually got another resistance, pretty much running into a wall again at this bottom. So this bottom has pretty much been a strong signal to let you know this is a very strong buy area. The market came down here once, twice, 3 times, 4 times, 5 times, 6 times. It had 6 chances to break that low area and it did not. So ever since that test at this bottom again, the market had enough momentum to break over the 7 moving average, broken this high over to the left. So it looks like we're on a good track of trying to make higher highs and higher lows. But until this high right here is broken, along with this high and this low, this area of duality is broken, we cannot pretty much confirm that the bulls are back in the market. If it finds resistance where we are right now, I would have to agree that the bulls are still in control. The bears are still in control to bring the market back down. So let's drop down to the weekly. So the weekly is kind of a better picture, but like I told you, my strategy, I kind of go off the moving averages. When the 7 is below the 65 or this is below the 65 or above the 65, either one of those, whether it's at the top or below, is a confirmation for me. But being that on the monthly, we can see that the 7 is below the 65, and on the weekly, The 7 is above the 65. This kind of lets me know that the market could be in a retracement mode. Until I get more confirmation, I would still have to lean on the side of sellers. Like I told you, until that high to the left over here is broken, we cannot get confirmation that the bulls are going to step back into the market. Excuse me. Also, when the market kind of makes this high, kind of make this all, I'm going to say higher high, and the market is kind of far away from the 65, like I told you, it has a tendency on finding its way back to the 65 to kind of retest. If we get that, I kind of expect the market to continue to go back up. So let's drop down to the daily and see what this last higher time frame has to say. So I feel like being that the weekly and the daily, the 7 is above the 65, that will let me know the bulls are trying to get back in. I'm sorry, the bulls are trying to get back into control, but we still need more confirmation. So right now, I would stand to the side on this one and get a little bit more confirmation, just because on my monthly, weekly, and daily, my moving averages don't align. On the higher time frame, the highest one, which is the monthly, the 7 is below the 65. But on the weekly and the daily, the 7 is above the 65. So right there lets me know I need a little bit more confirmation before I hop back or decide to take a trade. So let's drop down to the 4 hour. So for me, I wouldn't take a trade on this one until I got a little bit more confirmation. So with that being said, I think right now, if I was to have to stay on a side, I would stay on the side of sellers until I get a higher high or a higher low. I would be looking for the market to actually come back down to retest previous higher levels where it has previously broken. So let's unhide my signals and kind of see what's going on. So I feel like on the daily, we had a nice, the market touched the golden zone. Actually, let me go to the weekly and kind of explain the golden zone. So pretty much the golden zone, I kind of know that if this golden zone is broken, that will be a clear confirmation that the bulls has stepped back into the market and the market should be pushing up. But until this golden zone is broken, we would still have to continue to say that the bears are in control. So let's drop back down to the daily. So I think right now, being that it made a higher high right here from this previous high, and then it found support, and it's been going down ever since, 3 very big strong candles, I would have to stay to the side on this one. So one or two things I would kind of wait for to happen. I would kind of wait for, one, the market to come back down to the bottom of structure at this lower area. Once it comes back down to that lower area, I would then have to wait what the market is going to do, because being that it's been in such a strong down movement, it can have enough momentum to break this low. If it breaks this low, I think for sure we can definitely see the market come somewhere back down to this higher area right here. I don't think so much all the way down here, but I definitely think for sure to retest this high level over here. So we want to definitely be patient. Let me straighten this out a little bit. So we definitely want to be patient and wait for our confirmations to set up. So let's drop down to the 2 hour. So the 2 hours kind of showing me that ever since this high, it made a higher high. A lower high, another lower high. It even came back down to these areas where we were down way before. So I feel like ever since it came back up to make this nice little double top, I think I would still have to kind of lean on the side of sellers. So if I was to look for a selling momentum, I would definitely want prices to come back up just a little. Let's drop down to the 5 minute, because we want to see how high is high and how low is low. So for sellers, we want to buy low, sell high. So if we want to buy low and sell high, we know that if we're selling, we want prices to come up to a high price to appease sellers like myself to hop back in to bring the market back down. So I think there's 2 ultimate levels we can kind of look and wait for. So I think there's an area in between this low area over here, and this high level here. I think being that kind of it broke this lower level here, not all the way, but it kind of pushed through it. I think this could be a signal that the market is now breaking over the 7 SMA and could be having enough momentum to come back into this box. So let's drop back up to the 15-minute. So ultimately, I want to be on the side of sellers, even though I said I wouldn't take this trade, but things are just pointing to the side of sellers. Lower lows and lower highs have been forming. Higher highs and higher lows have not been forming. So I think we definitely want to kind of just stay on the side of the trend until it's our very friend. And ultimately, I think being that this low down here got broken, I think the sellers are definitely going to bring the market back down. So all in all, for the side of the sellers, I'll be waiting for prices to come back up either to these levels here or ultimately back up to these levels up here. So let me kind of put it like a little arrow. So I will be wanting price to come back up into this zone or ultimately this zone. And notice where these prices are. These prices are around key levels. This is 149,900 and this is 150.25. So those are key quarter levels that me and Tiberius have always been speaking about on previous streams. So being that we're in a down movement, we're looking for the retest. We're looking for retests of previous lows, which is this level right here, kind of where we are now. But if this low is ultimately broken, the next low to kind of retest is this low here. So we have two areas to kind of keep our eyes and keep peeled. So I think sellers is like a better route to take. But let me kind of break down the buyers because I don't want to leave no one out. So I think for buyers, where we are right now is a good level because we are at very low levels down at lows. But we cannot fight the trend or go against the fact that we are still in overall down movement. The overall trend is down. And literally fighting the trend is like going head up one-on-one with Mike Tyson. You would never win. So let's see where I can kind of give buyers some good ideas to hop in. So I feel like buyers, I feel like until some highs are actually broken, kind of like some highs that are sitting at the top of this box, or even some highs up here at this areas of here, I don't think until the market gets up here is when I would even begin to look for highs. I mean for buys. I honestly don't think until the market gets back to the 65. If the market can get enough momentum to come back to the 65 and ultimately break this double top that has been kind of hindering this pair for right now, I think if it stays below this area, the sellers are in control. But it's not until this box here gets broken is when I would even think to even start to begin to take buys. And like me and Tiberius said, we're not here to kind of like show you or misguide you. We want to always give you good advice. I would never give advice or something that I wouldn't even do. So ultimately, I told you, like on the higher time frame, until this high over here is broken, where is it at? Honestly, until this high up here is broken at 156.50 is when I will possibly take buys. But it's just something about this golden zone I wouldn't kind of play with until it's either completely broken up above or it stays down below. Because I feel like once it kind of gets into this box, it can consolidate, and I don't want to get stuck in a position where the trade can go against me. So I want to be patient. I want to take my time, and I want the trade to come to me. So is there anything else I kind of want to cover on this pair? No. So I like I said, I kind of think that the sellers are still in control. I don't think it's impossible for buyers to capitalize on this trade, but I feel like it would be very, very tough, so to say, because like I said, the overall trend is down. And really, if you are going to go for a buy move, it would either go from where we are right now to either this box here or to this box here. Let's see how many pips that is, and if it's even worth getting into. So this is a smooth 30 pips. So like I said, it's not impossible to get a buy out of this trade. You would just have to kind of trade the retracement, which is something I don't particularly like to do. But I like to trade on the side of the trends. But also understand that it can even go up a little higher up until the 65 moving average, and then find resistance here and then make its way back down. So I think this could be another area we possibly need to kind of keep our eye on. So I think, let me bring this down just a little bit. So ultimately, I think there's 3 levels. I think that can be solid for buyers. I think if you're going to buy in right now, would kind of be the best moment right now, because we are at low areas. Like I said, I would only either bring it to this blue box here. If it breaks past this, I would hold it to this next one. But the complete furthest I would take it to is the 65 moving average, just because the overall trend is down and I haven't got any signals or confirmations that the bulls are in control. So I'm going to stay on the side of sellers, and pretty much that's my analysis for this one. Let me see if there's anything else I need to say before I kind of go on to my next pair. I want to also kind of point out patterns. Patterns is something that you guys want to start to train your eyes to start to look for. Like, me and Tiberius has gotten on this stream so much that we can see double tops without even putting a line or a zone there. We can see head and shoulders without the lines being there, because we put the FaceTime in. So I think with this one, I feel like these 1, 2, 3, 4 quadruple bottoms could be enough momentum needed to bring the market up to either the 65 moving average or to retest these tops here. But me personally, I don't feel, at least right now, the market has enough momentum to break these highs. So let me see. Is there anything else I kind of want to point out? Because, GJ is one of those pairs that kind of grew on me. At first, it wasn't kind of lining up, but once I start looking at the higher time frames and kind of really honing in on previous highs and previous lows, things started to line up. I know a lot of my problem was I wasn't looking and doing my top-down analysis, which was starting at my monthly and breaking it down. Sometimes I would even catch myself just on the 2-hour, just deciding to make trades without even knowing which direction it's in. So I want you guys to really get in the habit of looking at higher time frames to ultimately see where the pair is going. And I want you to get your eyes familiar with patterns like double tops, double bottoms, triple bottoms, head and shoulders, cup and handle patterns. So these type of patterns you're going to always frequently see. And it's like one of those things, once you see it, you'll never be able to unsee it. So I think that's ultimately it. So right now, I think the 2 areas, so let me write this down. So for GJ, we're going to put GJ. So I think the 2 areas that I will be looking for right now is, first, I would want to see what it does when it gets to 150.75. I want to see what it does when it gets, I don't think it's going to get back up to this high, but I want to see what it does when it gets to 150.25. And mind you, look where those areas are. They're on important quarter levels. So I can't keep out 150.75. That's almost like not including all of the important quarter levels. So we'll include 150.75. No, we did 175.50, I mean. 150.50. I don't know. We'll just take right now 150.75, and then 150.25. Now I want this level also. 151.50. So those are some areas I kind of want to keep, out to kind of keep my eyes on the chart. So if it does come to these levels, I know that if it rejects at any one of those levels, my prediction was right, which means that we are still in a retracement phase right now, and it's pretty much looking for a nice area to retrace, and the market is actually going to come back down to retest these lows again. But like I said, the market has a mind of its own. We're only just giving an educated guess. So for this pair, I'm going to be looking for shorts at the areas of 150.75, 150.25, and 151.50. And that's my analysis on GJ. So we're going to move right along. We're going to go over AU. So AU is another one of those pairs that kind of grew on me. I wasn't really trading this one at first until I think a good friend of mine really pointed out how good these areas get hit, like the quarter levels. The quarter levels really get respected when it comes to this pair. So let's start at the best time frame on the chart, which is the monthly. So it's kind of like remove everything and kind of see what's going on. So this kind of looks like the GJ scenario where we had higher highs, it made lower lows, we had another high, a lower high, another lower low, a lower high, a lower low, came back down to these lower levels here, came back up to retest these areas over here, found rejection, and even broke down past this low area here. But kind of look at this. The market pushed down past this low area up here, but ultimately it came back up and closed. Excuse me, and that lets you know that whatever is down here, the market doesn't want no parts of it, or it needs a little bit more momentum, like a little rev up, like a motorcycle, like a vroom, 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 like a U-turn to come back to retest this low. So I think right now, monthly 7 is below the 65, lower lows, lower highs. That's what we're going to take from the monthly. We're going to drop down to the weekly. Now, on the weekly, the 7 is above the 65. So like I told you with my moving averages strategy, I need all higher time frames, monthly, weekly, and daily. I need my moving averages all to align, whether the 7 is below the 65 on all three, or the 7 is above on all three. And the reason for that is because I've noticed when all three of those time frames, when the moving averages line up, the probability of the trade going my way is a higher percentage. I've traded pairs where they didn't line up, and let's just say the trade didn't go against me, or it possibly began to go my way, but ultimately went against me. But I've noticed that doesn't happen too often when all the higher time frames line up. So the 7 is above the 65. So this right here automatically lets me know I need to be more patient and need more confirmation before I decide which way to go. But just kind of looking off the weekly and the monthly and the weekly, we've been seeing lower lows and lower highs, and we can't go against that. It hasn't been making any higher highs or higher lows yet, so it hasn't even broke this high yet. And I think this is the high that needs to be broken to really be considered a higher high. But what kind of is kind of shifting my thoughts as far as like not knowing which way to go is because ever since this low, the market has been making higher highs and higher lows on this side. It hasn't broken this previous high, But over here, it has been making higher highs and higher lows. The market has even broken up over both the moving averages, the 7 and the 65. And it looks like it danced right on top of this 65 and was like, oh, we out. And look where it actually pulled back down to. It actually pulled back down to a previous high area where the markets was once struggling at. So to me, it kind of looks like once it comes down to a low and it makes a higher high, once it makes that higher high, it looks like it ultimately comes back down to retest a previous high. Kind of like are you sure you want us to go this way? And once it does find resistance, it's almost like, yes, we want the market to go up. So as you can see, it bounced right off the 65 and we got a big push up. It's dancing on the 7 right now, but it looks like we might be getting a little bit momentum to break down below the 7. This wick right here kind of is one of those wicks that me and Tiberius always talk about. And it's one of those wicks that you can never miss. It's like once it forms this high wick right here, like a higher high, we know it has a tendency of retracing or coming back down to previous highs in which it broke before. So I also kind of like, if you kind of zone in a little bit, I kind of feel like this right here could be the head, this could be the shoulder, and this little high over here can be the shoulder as well. And we got a head and shoulders pattern. And it's now kind of looking like it's trying to break the neckline. I feel like if it breaks the neckline, I feel like we can definitely get prices to come back down to this high area here where it has broken before. It's going to find resistance at that high. And then I think that is when we can expect the market to go up. But until then, we would need to be more patient and wait for the market or the trade to come to us. So let's drop down to the daily. Alright, so on the daily, it kind of looks like we came down to this low area where it struggled before. So 1, 2, 3, and even lines up with a high area. So to me, this will be an area of duality. And like me and Tiberius explained thousands of times about the area of duality, which is a previous high or previous low pretty much meeting up and being an area where they all align. And that is the point where the market is going to whether do a big move up or a big move down. But I feel like just on the daily, kind of looking at the movement here, ever since this high right here, we got a lower low, we got a lower high, and it's now look like we got another lower low, and I feel like now we could possibly be getting another lower high. But I feel like that is still neither confirmed because one, if this neckline is broken, we would also need it to break this 65 because I feel like it could possibly push down below the 65 but ultimately close back up and psych all the sellers out and actually push the market back up. So I feel like with the monthly, the 7 is below the 65, and the weekly and daily, the 7 is above the 65. Like I said, I'm going to stand to the side and wait for a little bit more confirmation before I hop into the trade. But let me give you my ideas for both sellers and buyers. So let's start with buyers, just because we are at a very low area. Actually, let's go down to the 5-minute because we want to see how high is high and how low is low. So ever since this high area here, it's kind of been playing around in this area, kind of like a consolidation area. So let me kind of put like a little box over this. This high here and this low here. So I pretty much think if it can find enough momentum to even break down below the 65, break this low and come back into the box, I think that possibly may be the 3 confirmations we need to hop in for the short, just to take it back down to a previous high, because once the market comes down to a previous high, to me is where I think you would want to kind of hop out, unless you see the trade continuing to go. But if it comes down to a previous high and begins to reject, I feel like that would be your time to take profit. Hold on. So I think that would be a area for us to take profit. So I think first, if the market did go down, um, this high area here first will be take profit one. Then obviously this would be take profit two. But I don't even think it's gonna go that down that low. But just from on the high, just on from the 5 minute, it will be kind of hard to kind of push buyers. So let me kind of go back to the 15 minute. So I feel like ultimately, if we can get the market to kind of stay above the 65 moving averages and break these highs, I think that honestly, first, let me do all three confirmations. So first, I would need the market to break up over the 7 moving averages. That would be one. Then I would need the market to break these highs that's sitting up here. That's two. And then I would need this market to break out of this box and to ultimately retest these highs before it goes back up again. So that would be kind of my idea for buyers. But like I said, I feel like the trend is such in a down movement. I wouldn't even recommend buying. But if you wanted to be hard headed, I think you had could get some pips out of this move, and that would be from where we are right now, just to these highs over here. But I don't even think that would even be worth even getting. Possibly even pushing up just a little bit more, possibly to get 25 to 30. But I don't even think that would even be worth it because, like I told you, you will capitalize more off the trade of the trend than going against it. It's just it's clear math. Like, so I think that was for buyers. So for buyers, we would want it to break over the 7 out of the box and the highs. Sellers, let's see. Sellers, I think you have a higher probability of going your way just because the market was poking out of this blue box first, then it shot back down. It came back up here into this blue box, up high, lower than this high, but ultimately higher than these lows down here to make a lower high. It shot back down again. Now I feel like it came back up to make another high, and I feel like it's just going to push back down again either to the 65 or back to the bottom of the structure, and that's where buyers going to feel like it's good enough to hop in for a buy. So I think both pairs, both AU and GJ are similar in which where they're sitting right now because both of them have been making lower lows and lower highs, but neither one of them been giving any signs of higher highs and higher lows and that the bulls are in control. So for me, like I said before, being that the moving averages strategy doesn't align, my probability of trades wouldn't probably set out the way I want it. But if I was to take a side, I would have to go with sellers on this one, just because this wick formed here, it rejected nicely. This wick kind of formed here and it retested off this high, but I just feel like ever since this high out of this blue box, we've never had enough momentum to come back up here. And I feel like if we were going to come back up here, it would have happened either here at this candle with this wick, or it would have happened here. But whatever's sitting at the top of these highs, the market doesn't want nothing to do with it, at least right now, or it wants to come back down to retest some highs that it previously broken, which are these kind of around these highs right here. So this area, but actually if you kind of look at it, this wick kind of almost touched that high area because this wick looks like it hit this high just to the T, and the market is now pushing up. But like I said, until these highs over to the left are completely broken is when I would even begin to look for buys. Even though it's kind of showing strong buys right here, it can get to the top of the box, form a wick right here, and just shoot all the way back down. So for me, I wouldn't really stay on the side of buyers. I would be more on the side of sellers, just because, like I said, the higher highs and higher lows and lower lows and lower highs is a very, very important concept, because until those things are formed, let you know that's the way the market is going. When the market does make higher highs, we can even start down here. When this market begins to make higher highs, it makes higher highs. Like, it retests at the perfect areas. And when I say retests at the perfect areas, it makes this high, comes back down to retest lows over here. It shoots up again, comes back down to retest this low way over here. Being that these were touched here, this area was actually very, very strong, because if I was to actually put a box across these lows, you would see how many times the market has come into these lower areas and didn't have enough momentum to break through it. So, but if I was to say, I would be more confident with the selling on GJ than I am on AU. Just because this area right here, every time it touches this little blue area, it pops up. So, and then we finally got the break of these highs here. So I think ultimately, like I said, I still wouldn't make a live trade. Ultimately, now that I'm explaining it out loud, GJ is the one I would take a short on. This particular one, I will be looking for buys, because it's been breaking these highs over here, and it's never been able to come back down to low areas in which it was before. And it's actually been staying up up out of the red box. So if it stays up out of this red box and above the 7 moving average, I would have to be all in for buys. So let me see if there's anything else on here before I bring a special guest on here. This is a good friend of mine. A good friend of mine I met back in college. This is actually a good friend. He's seen trading from me. So before I get into that, let me give you my final thoughts on this before I bring my guest up. Let's see. So yeah, so that right here is this box here is pretty much an area I want to kind of see get broken. Until this area gets broken, I would have to kind of be neutral, just because it has been consolidating in the zone ever since today. It actually got into the zone earlier today. Today is the 13th. So let me go to the 15 minutes. I want to see how. Okay, so this was the start of the 13th, right around here. So it actually came up in here. So yeah, I want to be more patient and see what it does in this box, because mind you, look what it's doing. It's just touching the top, touching the bottom, touching the top, and touching the bottom. So until we get clear breaks of highs or clear breaks of lows is when I would decide to hop in for a trade. But like I said, if I was to kind of lean towards a direction, it would be buys. So with that said, that is my analysis for AU. So let me see if I can bring up my guest for tonight. Let me see what's going on with him. All right, let's see if we can bring him up. What's going on? What's going on, everybody? This is my boy Murtad, man. Go ahead and give your introduction on who you are and what's going on with you.
What to do? My name Murtad, Murt for short. Nah, man. Been trading for a while. Just came. My man, I'm usually sleep around this time because I like to be up for London and New York, but I decided to stay up, help Lil D. I'll be a little special guest and give you guys my 2 cents on the markets and what I've been looking at lately.
All right, so the only thing I'm gonna need you to do is just share your screen, and the floor is yours.
see my screen.
Yep, you can see a stream. Go ahead, my boy. Do your thing.
All right, but so I was in here playing with the dollar. That's where we're going to start off at. We're starting off at the monthly right now. As you guys can see, for a while now, it's been on a long tracing down. I mean, the Bears is obviously in the market for a while. We had a nice bit of consolidation here after it made this low. It was failing to break this high until we had this nice, strong impulse move right here to break all of this noise right here. Came up here, and then it was failing to go even higher. So we had a lot more noise right here than we did right here. Because look at these impulse legs. We have a strong impulse leg up, and then we have just a whole lot of stagnant movement until we made this high. Then we have a nice strong impulse leg down, breaking these lows right here, and then a lot of noise on this way back up. And then you see those strong wicks right here before you not have a nice strong impulse leg down. All right, so my opinion for the dollar is that the dollar is weak. It's going to be breaking down. You can also look at things like crypto. I mean, how cryptos is making new highs, and the crypto and the dollar have a negative correlation. So if the crypto is usually going higher, then the dollar is usually tanking. Let's drop down to the daily. All right. As you can see, a lot more noise. I'm gonna pull up my markups. So we have the zoom in a little bit. We have a few volume imbalances right here. Volume imbalances is basically areas in a market where there's no bodies. There's all wicks. So as the market was coming down and creating this low, at the beginning of the year, it had a nice bit of noise trying to make its way back up. But it was filling in one imbalance that you can see that it poked up right here, came back down, touched that higher low, came back up, went straight through both imbalances, and then tapped this highest imbalance, fell in to break these highs up here. So as you can see, it was a strong reaction to this last imbalance right here, and then it broke down. All right. So in my own analysis, I didn't want, because I was riding this wave up as far as the correlations between the dollar and the foreign pairs. So, you know, if the dollar is going higher, then the other pairs are going lower. I usually trade EU or GU. So I was going short, and I did not want to see the market trade below this, basically this candle right here. As you can see, it was a strong impulse move up. It made a higher high. It broke structure, relatively equal lows right here, and then it broke that high to the left. So then looking at this high right here, it's like a bit of a mitigation or a breaker box. And then as you can see, once it trade back down into it, see those wicks, see how it's reacting within that box right here. So I wanted to see the market trade right back above it and close this imbalance out and try to reach for the buy side. But as you can see, it didn't. And now I'm thinking that the market is going to trade lower and actually take out these relatively equal lows right here and evidently trade down here. So let's drop down to the hourly. As you can see, it's pretty much been following the narrative. It came up. I mean, if I want to pull the daily markups up, as you can see, the reaction to that volume imbalance, even on the hourly, no bodies closed above it. It literally tapped it, all wicks, and ever since then, it was a strong movement lower. Even right here, a very strong movement lower, and a whole bunch of crazy wicks just for liquidity runs, and then it came right back down. Just more strong movement lower. We put our hourly markups here. As you can see, a couple sell side imbalances right here. But then just look at that candle in that box that I had drawn up on the daily. As you can see, like once it came down within it, it kind of wanted to consolidate a bit. You see those picks right here in the bodies, not wanting to close inside the box. Came down, came to the middle of this trading range, came back up, tapped the top of it, and now it's just going up and down, and then finally today, it came up, took out both of these little liquidity pools right here, came up, literally tapped the top of it, and dropped down even lower.
All right, so pretty much what I want you to also do too is also tell the people, one, which direction you would want to go. Obviously, it's pure as day that it's selling, but tell the people where you would want to get in at, your take profit and your stop loss.
So I don't trade the dollar. So the dollar for me is just so I'm trying to figure out bias. That's how I trade. So I don't trade the dollar. Next, I was going to show the commodities just to give the viewers what I look at to kind of strengthen my bias. So if I'm thinking the dollar is going to go lower, I'm trying to figure out other reasons to support why I think the dollar is going to go lower.
Oh, okay, okay. So pretty much you use the dollar index as a way to kind of decide other pairs.
Exactly. So we can
Perfect.
even compare right now for a little test run. So we can go to
Yep.
compare right here, and I could even pull up EU.
So for those people who don't know, the DXY is the dot. Matter of fact, let's let Mert take explain that. So just
Yeah,
explain.
like the DXY is the dollar index. So when you have EU, now you have your European index, and then you have your dollar index. That's what makes that pair. But I use my analysis that I'm doing right now solely on the dollar, so we can use that to kind of see the correlation between the other pairs. So the other pair that I was going to show later on in the slide is EU, and how the lower prices, and it's kind of a bad example right now, the lower prices in the dollar is going to be a negative correlation for EU,
Right.
and then in EU you can expect to see higher prices as well.
Right. Okay.
So we can go straight to EU right now, actually.
So you hear that, people? You can use these indexes to determine other pairs and which direction it's going to go.
Exactly.
Continue.
So as you can see in EU, it's pretty much vice versa of what we were just looking at in the dollar. Prices made a high, it came down, was failed to break this liquidity pool right here, this relative equal lows. It tapped this fair value gap, basically a gap between prices. As you can see, it's like a low right here, and then it created a high right here, and there's a gap right there in price. Price like to seek those out to fill in those gaps. So as you can see, price came down, and then this is precision, man. You don't get things like this. You see those bodies, how it's respecting that fair value gap? It didn't even come in and fill it. It just tapped it, and the bodies respected it to the T. And then now it's moving up. And then I'm expecting the euro and for further days to reach up and try to take out these highs as the dollar drops down a bit.
So this is the pair you would actually trade, the EU, based off of your analysis of the.
This is the trade I was trading today. I was in EU earlier today. As you can see, even just switching it up a bit is another fair value gap right here. And then as the price traded right back up into it, as I was just saying earlier, I didn't want to see the dollar drive too much lower because it's going to keep dropping in my opinion. Because the same thing with EU, I wanted the prices to keep dropping. So I didn't want. I was looking at this area right here. You see all those wicks. So I was expecting it. Once I start seeing these wicks right here on the eye, it's going to keep going higher, and I'm just going to get them for the long. But I wanted it to keep dropping down lower. So let's drop down to an hourly, so we can look at some entries.
Yeah, I was gonna say this looks so good. You gotta tell me your entry, your take profit, and your stop loss, bro. This looks so perfect.
So for today, I took profit at about right here. I usually take profit at 11 o'clock. So at this candle right here is where I was taking profit at, and it was perfect because it just took out this liquidity pool that was right here. But I actually got in somewhere right here as this candle was dropping down. That's when I was going in for the long. The reason why I was going in right here because I thought it was just going to bounce off this order block, but it actually came down to this order block right here and then bounced right up off of it. So I trade off order blocks and I see price searching for liquidity pools. As you can see, price right here, that wick right here going off that order block. This price is doing the same thing, going on that order block. And then this candle right here is trading off that order block. All of it is seeking liquidity pools. You see? So right here, this leg up, I didn't trade this. This is just a hindsight analysis. It was trading for this liquidity pool right here, this high.
So do you think the market is going to continue to go back up, or do you think that the market could possibly come back down and retest those highs before it continues to go back up?
I can see the price coming down and retesting taking out some of this liquidity right here, come down, retesting this mitigation, and then continue to go higher. But I would expect that overnight, like by New York session, in my estimate, price should have already came back down, and then by New York tomorrow, it should be ready to draw another price leg up further.
Because actually, where it's at right now, that high just to the very left of it, it's broken that high.
Yeah, it's broken that high, and it's broken this high as well. And I think it's searching for these relatively equal highs.
Yep, yep,
Here.
yep.
Because it's right there, and you see that big, see all this red? That's imbalance. That's just open price that price is going to be reaching for and trying to seek. So, so if it doesn't have enough momentum to do it right now, then it will drop back down and try to get some more orders before it puts that other price leg up further.
So how many pips is it from that high at that green line back up to the red zone? How many pips is that?
So from right here all the way up to these highs, that's about 60 pips right there.
About 60 pips. So I'm pretty sure people, you guys can definitely get a 25, 30 out of 60. You don't even need to get the whole 60. You can just secure your pips for the day and just call it. You don't need to get every single pip.
Honestly, if I was on a little training thing for this whole last month, I was doing one-on-one setups. So I was doing my stop loss for 10 and profit for 10 every single day. And it's relatively easy if you just be patient. You have to be patient and be waiting for price to do what you want it to do, and then don't go against the trend.
Right, right. So what's some other strategies that you use other than the DX? Excuse me. The DXY comparison. What's some other strategies you use to determine whether you're going to hop in for a trade?
Well, I want to so hopping in for a trade and directional biases is two different things. So what I like to do a lot is just figure out if I'm either a buyer or a seller, because a lot of people get. I heard you mention earlier, if you spend too much time on the 2 hour time frame, then you get like confused on the higher time frame bias. So if you're on the higher time frame, if you're thinking that the bulls is gonna be taking over, you might spend a little bit too much time on the 2 hour, and then you might get caught up in a sell, and then it starts going up. You're like, damn, I already knew it was going up. So that's why I spend most of my time figuring out if I'm a buyer or a seller. And then I spend that time just looking up my bias setups.
And just briefly, how much time do you think that, if this is the estimate, how much time are you actually spending to see what direction you're going?
It doesn't take long. It doesn't really take long. So I would just to tell you my schedule, I wake up at about 6, and I don't take my first entry until about 8. So it takes me about an hour and some change to really be determined on my setup. Which direction I'm going. It takes me about, New York session, a setup usually happens between 7 and 8:30 in the morning. And then I like to take profit around 11 o'clock, right before London close. Just off volume, because that's when most of the traders are in the market. So that's when the market is going to move the most. Once 11, 12 o'clock start hitting, London is closing. So now you just have New York traders, and it's not as much volume as it was with Euro in the market as well.
You hear that, people? The word volume. Not only does Murtai use it, not only that Tiberius use it, as you can see, my boy Murtai use it as well. Volume is very, very important, and it's not one of those things you're going to be able to understand overnight. Volume is a thing that takes time for you to recognize when to use volume and how to use volume. And how long did it take you to learn volume, if you was to say?
I've been studying forex for a few years now. It's definitely not something that you just learn in a month or two. You definitely want to demo trade for at least a year before you even put live funds into the market. So definitely spending a little bit of time in front of the market, but also just being consistent and being disciplined with the rules that you create for yourself.
That's it. And it's like you're literally piggybacking off all the things in the entire Tiberius, trying to tell our audience, like, you have to be patient. You have to create a plan for yourself before you hop in the market. And like Merk just said, it took him pretty much like a year before he actually put real funds into the market. So that means that entire year was spent on FaceTime, understanding the movement of the market, knowing and recognizing patterns. So this is just not only something that I do. All great traders do it. So you have another pair you want to go over, or this is pretty
If we
much?
could just take a quick look at the commodities real quick. I
Yeah,
just wanted to touch base on corn and cattle,
yeah.
just
That's
just so you
talk
guys
your
can
judge,
see.
man.
Not really too much marking up, just so you guys can see. The one thing about the market I like to do is look at the correlation between things. So usually in commodities, if the corn and other commodities are going higher, that means the higher in price. That means corn at the supermarket is going to be more expensive. That means meat at the supermarket is going to be more expensive. That also means that the dollar is not worth what it's really worth. So that means in the market it's going to be dropping in price. So as we just seen in the dollar this whole year, starting this whole year in 2021, excuse me, the dollar has been searching for higher prices. All right. And as you can see here in the corn market, not only this year, and that's just this little window. Let me help you guys out for a visual. Um, that's just this window right here. That's this year. So as you can see, just by that window alone, not only is the dollar seeking higher prices, but corn future is seeking higher prices as well. And all before that, you have a very strong impulse leg up higher. So to me, that seems like a cracking correlation. So a cracking correlation, that means that a strong impulse move is going to be coming soon. So that's why I feel as though, let me drop back to the dollar so you guys can see what I'm referring to. That's why also with that happening and price reaching around the area that I did not it wanted to reach to, that I would expect another strong impulse leg below these lows and eventually seeking this size of liquidity right there.
Cool, man. And look how my friend Murtad is using other financial vehicles like excuse me, commodities to pretty much understand the market because literally all this stuff is connected. Tiber
Everything's connected.
Everything is connected. Tiberius trades futures and he uses futures in his analysis on futures to compare and to see where the forex market is doing. On the flip side, Murtad is using commodities, things that's bought every day, gold, corn, wheat, sugar. Those things also determine where the dollar is going to go up or down. Because I guess from my adjustment, what I hear is that when prices of corn goes up, does that mean the dollar is going down or is not as strong or has
Yeah,
as much
the
buying
dollar is not as
power?
strong. Yes,
Yes.
that's correct.
Yes. So if you know that if the price of corn is going up or is at higher areas, we got to know it's going to take a little bit more money to buy the corn. So that means the dollar is not as strong to buy as much corn as it had done before, just because corn is at such a high price. So
Exactly.
you can use these things not only support and resistance, not only zones, not only Fibonacci's, not just looking at patterns, but you can use other financial vehicles like the futures market and the commodities market and
Or
even
even crypto,
or even crypto.
because
Crypto.
crypto is opposite of the dollar. The
Mm-hmm.
stronger crypto is going to get, the weaker the dollar is going to be. So you can just
Exactly.
look, because crypto is easier to follow because it's on social media. A lot of people
Mm-hmm.
is getting making it a lot more than what, I mean, not more than what it is, but they're just making it known. So it's easy to have access to
Bringing
that
more hype to
information.
the name.
Yeah, exactly. So you can see that with Ethereum reaching all-time highs and
Mm-hmm.
Bitcoin reaching all-time highs, that there has to be some type of correlation with the dollar. And you can go back to the dollar and see that it just started dropping.
Mm-hmm.
So that means that it's bound to drop even more.
Mm-hmm.
Okay.
So there you have it, guys. Like, I guess if Mert doesn't have anything else to say, shout out your
Nah,
brand. You have anything else to say, my boy?
nah, that's about it.
All right, my
Yeah.
boy. So shout out your brand. Shout out where people get at you.
Yeah, you can get at me
Put
on
yourself on,
Instagram,
man.
Mert underscore Supreme on IG. I do a whole lot. I manage artists. I throw events. As you can see, I dive into these markets daily. I'll soon be a real estate agent. So, I mean, get with your boy. You can follow me on the gram and get a lot of things you need.
Say your IG name again so the people could get
Uh,
it again.
Yeah, Mert underscore Supreme. So MURT_Supreme.
All right, and shout out your business too, man. Put your people in your
Mastermind
business.
Productions LLC. You already know.
All right, man. You hear that, man? So there you have it, man. That's my guest, man, giving you his analysis and his strategy on how he hops in these markets and secure the bag, man. So yo, Mert, yo, you my boy, man. Appreciate you for pulling up to the
You already know,
show,
bro.
showing
Appreciate you for having
love,
me on.
man. I'ma hit you. You know what it is, man. I'ma hit you.
No. All right, brother.
All right, kid. So there you have it. Uh, so there you have it. You can use other financial vehicles like crypto, like commodities, those things to determine where the market is going. So there you have it. So we are now going to move in the best part of the show, which is Traders Talk. Trader Talks gives me the opportunity to give you guys the real deal on what this trading is like. I'm not here to flash money to around you or show you the cars, but I'm here to give you real keys and some things that you can take home with, and pretty much give you some things maybe I wish somebody could have possibly told me. So one thing I want you guys to take with you, man, is creating your own strategy as a trader. You have to create your own strategy. It's almost like having an ID. Like everyone has their own strategy, their own unique, tailored. Matter of fact, I would compare a strategy to a fingerprint. Every person has their own assigned fingerprint, and it works for them. So you have to see, are you a type of trader that likes to use support and resistance? Are you a type of trader that likes to use Fibonacci's? Are you the type of trader that likes to use patterns? You have to decide that. Just like both of my best friends, Tiberius on one hand, he uses futures to kind of decide and make his decision on his trades, whereas my boy Murtaugh, he uses commodities, things like corn and things that are bought a lot, like sugar and things that are so important in this world to really understand the dollar, because a lot of these commodities are bought with the dollar, and we have to understand the higher the prices of these commodities get, the more the dollar is pretty much, so to say, you were going to need more dollars to purchase that coin. Like the dollar almost gets weaker the higher some of these commodities get. And I'm pretty sure it's kind of like the same thing with the futures. I don't really know so much the futures because that's Tiberius's lane, but you can use other avenues of financial vehicles to determine your trades. Another thing I want you guys to take with you guys is looking at patterns and recognizing and pretty much setting your mind to see head and shoulders, pretty much to see cup and handle. You pretty much can go to, there's a book called the Encyclopedia of Chart Patterns. I think it's written by this Chinese guy, but it has every single pattern that the chart creates. All you have to do is find two or three of those patterns, master those patterns, and that's all you need. And I promise you, that would make your trading, you become a better trader. Also, is really paying attention to your time frames. You need to look at your monthly, weekly, and daily to really determine which direction the market is going, because it's really easy to get yourself caught on just the 2 hour or the 1 hour and just begin making trades just off a pattern you see without looking at higher time frames to determine whether if the overall trend is up or the overall trend is down. Like you may get on the 2 hour and see higher highs and higher lows, but then understand that the overall trend is down and that it's only in a retracement mode, and now you are caught on the wrong side of the trade. So those three things are the things I want you to take with you tonight, is recognizing patterns and only get three and master them. Create your own strategy as a trader. Not everyone has the same strategy. You can see Tiberius and Murtad have different strategies, but are kind of the same in which they're using it. And three, pretty much just putting in the time. And like Murtad said, he took him a year before he actually put in real funds. So really understand this is a skill that you learn, and you're not gonna hop into this one day with real money and begin to make money without putting in the work. If you want to be a successful trader and a great trader, anybody that wants to be great at something has to put the work in. You don't see LeBron dropping 50 buckets without going to practice. You don't see LeBron showing out every night without him posting IG videos of him and his family training together as a unit. So it's work, 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 man. It's like once you master certain things, I promise you, you'll be better traders. So that is all I have for tonight. I appreciate every one of you guys for pulling up, showing your love. I really appreciate my homie Murtaugh for showing the love. I appreciate you, my boy. You already know, man, you can hit me up on IG, on my personal IG, which is at I'm the D guy, at IMDGUY, or my personal IG, which is Pearl _ financial _ LLC. And you can always shoot us an email at bisontrading2018 at gmail.com. Again, bisontrading2018 at gmail.com. So, and you already know you can hit my boy Tiberius. You catch him every morning, 9-10. He breaks down his futures. You can hit him at Ty Trades Futures. It's future with an S. You can hit him on his IG. You can always hit us an email. We're always dying to get questions and show you and you us seeing results from our audience, and show us some of the levels that you even traded. So you can always pull up, send us an email, send us a DM. But definitely until next time, this Thursday, please pull up, same time, same place. But that's all I have for tonight. So I appreciate everyone for pulling up. And that's all I have for tonight. So, bow, man. Appreciate everyone for pulling up, man. And that's all I have. Thank you guys for pulling up. Love y'all, man. Peace.